lot for joining in and all the best. That's KEI Industries. By the way, there's a new IPO that opens today, so let's talk a little bit about that. Landmark Cars is the IPO that opens today. It's an issue size of 552 crores, out of which 150 crores is a fresh issue and 402 crores is through the OFS route. So about 150 crores of fresh issue comes to the company. This is the #1 dealer in India for Mercedes, Honda and Jeep. So it's a premium auto dealership company. The company is profitable. In fact, it reported a profit of 66 crores in FY22 and the fundamentals have been strong. It's been a compounded growth rate of almost 16% over FY20 to 22. The margin profile has also improved. It was sitting at very low margins of around 3% way back in FY20 and that's improved to about 6%. The only problem is that there is a concentration of clients within Maharashtra and Gujarat. So diversification is something that we need to ask the management whether they are looking at that. And also there's a lot of competition within this dealership space. At the upper end of the price band of around 481 to 506, the stock is valued at 28 times PE as of FY22. But, well, to give us more details on the overall business as well as the way forward, we have Sanjay Thakker, who's the chairman at Landmark Cars, joining us right now. Mr. Thakker, good morning and thank you for being with us here in the studio. I was just mentioning that 400 crores would be the OFS and 150 crores is through the fresh issue route. So 150 crores comes to the business. Tell us a little bit about what you plan to do with that and what kind of growth are you looking at?
Yes, sir. Thanks for having me on the show. So over a period of time, we started with one dealership in 1998. It's 25 years since we are in business now. And that has grown to 112 outlets. And this has happened because of two factors, if you ask me. One is that the ownership and management has been separated at Landmark since the beginning. Most of the dealership chains that you will see in India are promoter-owned and promoter-driven. They work on it day in, day out. Also, we have an asset-light model. So we do not own properties. Only 2 out of the 112 properties that we have today are owned by the company. Now, that has made us grow as fast as what we have been able to grow. We are not only the #1 dealer for Mercedes-Benz, but also for Jeep, for Honda, for Volkswagen in India. We will be a meaningful player for BYD. We are with Renault and Ashok Leyland trucks. That's what we do.
Sanjay, what is the size of the opportunity, according to you? I mean, because you said you've been around 25 years, right?
That's right.
And I think Sonia just mentioned the total profits were last year was 66 odd crores or so.
That's right.
What's the size of the opportunity we're
So last year, again, one needs to understand that we had a curtailed operation because of COVID. We didn't have a full year of operation. I mean, that's what I can say on that. The size of the opportunity is enormous. Let's take Mercedes-Benz, which is right now in the news more than any other brand, so I'm mentioning it. It will have the highest ever sale this year. The volume would be maybe 15,500, 16,000 is what everybody is talking about. Compare this to China, 7.5 lakh cars. Compare this to Korea, 70,000 cars. Now, if India were to become a world power, third largest, fourth largest economy in the world, really this is not what the country deserves. The country deserves more. We believe that the aspirations of the people are higher. And the waiting list on, say, a Mercedes-Benz car, again, what has been in the public domain is that they are on with 5-6 months of waiting we are sitting on. So I believe that the journey has just begun. We are here for a long haul, a long road ahead of us.
All right. You know, Sanjay, you're hitting the sweet spots in terms of asset light, ownership and management separate. The street likes to hear those sort of comments. But as we said earlier, the 150 crores will be coming to the company, right? So that, how does that going to be utilized?
Yeah,
if you could break that up for us.
Yeah, so that is something that we will go to repay our working capital debt.
Okay.
So except for Mercedes-Benz, where we do not hold any inventory in our books from 1st October 2021.
Okay.
It's a different business model that has now come into play. We hold inventory. And the money will go to repay that. The entire money is going to be utilized.
What is the debt currently, the working capital debt and consolidated net debt?
So we do not have any long-term debt in the, no meaningful long-term debt in the company. The working capital debt, which is basically seasonal in nature, where we hold stock of spare parts and cars, hovers around some 300 odd crore rupees generally.
Okay.
So
what is different between, you said that with Mercedes you don't hold the inventory.
Yeah.
Could you tell us what is?
It's an interesting model which has come, what is now commonly known as retail of the future. So what happens is that the entire stock of vehicles has been taken off our books. We have ceased to be dealers, but have become franchise partners or agents. So when you enter the showroom, you will see the cars parked in the showroom. They are not typically owned by us now. They are owned by the factory.
Okay.
The test drive cars are owned by us, the manpower is ours, the showroom is ours. But the stock is not there. There is all India one price. There is no inter-dealer discount which happens anymore. So it's a transparent thing. The customer sends money directly to the factory and the car is delivered. We do the insurance, finance, registration, everything.
So, so the risk of the inventory is with the company.
It is.
Not with the OEM, not with you.
Not with us anymore.
But for them to assume that they would kind of, would margins, etc.
In fact, the retained margins at our end have increased because of this. Earlier, what was happening is that good amount of money was going in holding cost interest and a large part of our margin was going in discounts.
Okay.
Now that has gone away. So the retained margins have significantly improved since the...
If you can just help us with some growth targets. I mean, you've done over the last few years, about, on an average, a 16% compounded growth on the top line. Is that something that you can sustain in FY24 as well? And what would the growth triggers be?
Yeah, so the Indian, there has been a significant shift towards premium cars. There has been a 20% shift between 2017 and 2022. People are buying premium and luxury cars. Luxury is still 35 to 40,000 units in all for a country like India. And we are sitting on significant back orders, on significant orders. This year also was a year where we saw curtailed supplies because of the chip shortage initially and then Ukraine war later on. So once that happens and then there is a increase in the selling price, all the OEs have increased the selling price. So my sense is that this cocktail is looking at a significantly better growth than what we have seen earlier.
Okay, Sanjay, very quickly, we're talking about the luxury cars. What about the pre-owned vehicles? It's a smaller part of your business. Where do you see that contribution headed?
So pre-owned cars is a very interesting and an uncharted territory for new car dealers. In America, 30% of the used cars are sold by the new car dealers. That's not the case in India. And there are several reasons for it. What we at Landmark will be doing, and we have invested in a company which is technology, a company, new age company. That's what at Landmark we do. We not only do what we do, but also invest in disrupting technology or people who we can partner with. So that technology will give us real-time valuation of the pre-owned cars. We will be focusing on buying and selling our own branded cars.
Okay.
So
any more such investments or acquisitions that you plan to do?
30% of what we are today is by way of M&A. Since the time we have started, 30% is what we are. So that's what we will continue to do. I think we will have better opportunities when we get listed. I think it will open more doors.
And will you move out of Gujarat and Maharashtra because there's a concentration
yeah,
this
so
way?
really not so. We are very meaningful now in NCR. We are in West Bengal, we are in Punjab. So when we wrote the document, yes, there was these things, but it is spreading as we speak.
All right, Sanjay, we'll wish you all the luck. Thanks very much for your time. Thank you for dropping by.
Yeah, and what I can say is that a lot of people have shown confidence. The anchor book which just came in, HDFC Mutual Fund, Nippon Mutual Fund, Goldman Sachs, Birla Mutual Fund. So it gives me a lot of hope.
All the best, all the best.
Thank you very much.
Thanks.
That's Landmark with the offering in terms of the IPO. Well, our special segment is Charting Trends, which comes up next. Rashmi Bhatnagar is CMT, head of Global Equities at All Star Charts. She's back with us on the program.